Here's how to get a restaurant business loan up to 5 million plus and 0% interest for 6 to 18 months up to 150, if not 250,000, literally with no docs and no collateral. That's another one. Hi, my name is Michael with Viral Funding Solutions. I'm a business loan broker expert who's helped out a lot of restaurants get the right type of financing under the right type of strategic partnership and roadmap under the right vehicle. And I've been doing this for a long time, so I've also funded a lot of other industries, background, sizes of companies. And actually, most recently, I funded quite a few restaurants, and I've been doing it in the past and will continue to do more in the future, where I have been able to get businesses and business owners about 200, 300, 150, 80,000, 100,000, 20, 30, and even with SBA loans, probably doubling that amount. So what you can do, and your options are not limited. You can take bridge funding and in the meantime even be looked at getting an SBA 7A loan. And then you can even consolidate what you have here and put it underneath one if you qualify for an SBA loan. But the majority of restaurants in this space and in this market, from what I'm seeing, is normally between 1 to 2 years uncollateralized. That meaning you don't have assets, any kind of collateral, real estate, heavy equipment, unpaid invoices, and so forth, inventory, the list goes on. And so if you don't have collateral or you do not want to provide it, you want to retain it, especially going to a bank and they put your home, they put a lien on the property, they take out other real estate, equity, etc. There's more involved. So if you don't want to go through all of that and you know you won't qualify, even people who are bankable clients, they don't, because the market for banks right now are really hard and they're pulling a lot back, the amounts, lines of credit especially, and so forth. And it's never been so like close with prime rates plus an additional amount. So bank rates, prime rates, lender rates, plus an additional like 2 to 3 or so on top of that, depending on the service you go into. So as a restaurant owner, just keep in mind, you usually see between 1 to 2 years uncollateralized. You have lenders who can do 1 to 5 years. And this is more of like a term loan, intermediate, middle to longer. So once you pass 2 years, you're starting to get into a little bit of longer, 3 to 10 years. And when you get to that 3 to 10 year term loan, that's more of an SBA. You can call it still term loan for unsecured term loan options, that meaning non-collateralized, or an SBA 7A loan between 5 to 10. Usually it's up to 10 years amortized if you do qualify for that. And I have a lot of restaurant owners who are doing that right as we speak, and others who have already done it and taken their funds, and it helps them out really well. So you can position yourself between 1 to 2 years, but you have to have the right profile. And I talk about fundability a lot. And so if you have the right time in business, revenue, credit requirements, and more. So even restaurants right now can get 3 to 11 months. It just depends on your revenue, your credit, your time in business. So a lot of the time when you are doing just 15,000 and above, but not 25,000 and over, you have less than a 600 credit score, you have less than 6 months time in business a lot of the time, or less than a year. In a lot of cases, you see that 3 to 11 month term, or that 3 to 11 month time frame. And we can classify that as more of a merchant cash advance or a hybrid cash advance. And I don't want to get too specific, but merchant cash advance is based on future receivables. So you're paying back a portion with what you make in your future sales. So it might be a specific set amount, like 10% of your daily sales or whatever it is, or it fluctuates where you make more one day, so more gets taken out, you make less one day, less gets taken out and back to the lender / merchant. Or there's a hybrid advance where it's encompassing all revenue. The merchant cash advance or credit card statements is usually what they look at a lot, a little bit of other things. But with the hybrid approach, which is the one that I recommend most, it could be generally like 50% less expensive, more manageable. And this is where it encompasses all revenue, and it actually helps you get approved for more. So we're not looking at just credit card statements or so. We're looking at credit card statements, ACH, any other form of deposits, wire transfers, electronic transfers, cash, checks, etc., and making sure that it is looking good. So we can look at the bank statements. Usually we'd see about 3 months of bank statements, a copy of your driver's license, and a voided check at a minimum in a lot of cases. And I'll get into the no doc one here soon, which is more of a credit-based program. It's not a loan per se, but it's cool. And so as a restaurant owner, like the ones that I recently got funded without an SBA loan, without it being collateralized, because of the market right now, and it's hard, especially for restaurants, with everything going on, like the Restaurant Revitalization Fund, EIDL, and things like that that are not apparent right now and open, or when you're watching this, it may be some adjustment to it and probably open, but that's not certain. especially with the people that I connect with. And I work with the best lenders and underwriters, in case I didn't say that. And I get people funded, and I usually, a lot of the times I compete, and we get the better offer for the individual. And you build a stronger relationship with me. With me, it's more personal and human approach, as opposed to you being a number. Everybody who works with me, I get to remember, and I know that I took the amount of time and value that I provided you with, just with this video alone and my other content on YouTube, or where else you're watching from, my blog, etc. And that's what disassociates me, or you could say differentiates me from others, and my story. I've been in your position looking for funding way long ago, and just trying to make it for the first dollar, trying to scrap by and making sure that I get my business running and get it to a level where a lender can see it. But the merchant cash advance, you have the hybrid cash advance, you have the intermix term loan, 1 to 2 years. Some of these are a mix within an MCA, so an intermix term loan with an advance, a cash advance. Those are great options, and that's where a lot of restaurants end up going into, 1 to 2 years, especially if you're doing 50,000 and above in monthly revenue. You have like a 675 plus FICO, maybe a year or two plus time in business, will help you be more eligible for that 1 to 2 year time frame. And we can push it, but we have to make sure that maybe you have other debt obligations, your credit, maybe there's something there that you have to pay. It's more revenue based, looking at your bank statements and your revenue. But if there's something that's holding back, that's why you get a shorter term, sometimes a higher rate for some of these. But you got to get your foot in the door. That's what I always tell every restaurant business owner, is you got to start somewhere. So I can go ahead and start naming like equipment financing. I can start saying other forms out there, like I said, SBA, cash advance, hybrid cash advance, merchant cash advances. You have lines of credit. Lines of credit for restaurants right now, though, are pretty hard to come by unless you're an A tier and you have substantial revenue. Your credit is high too. That's another credit-based program. Then it would be rewarded to you, but it's not as much as getting a lump sum. So you have to think about the pros and the cons, and say to yourself, even if I got approved just to begin with, 20,000, that's all you could get approved for. Usually they approve from 75 to 200% of your average monthly revenue, but a lot of the times it's your lowest monthly revenue. If you're doing 15,000 and above, when you're doing 5,000 to 15,000, a lot of cases you get up to 75% of your monthly revenue, your lowest monthly revenue. So if you do those numbers, you understand, okay, well, if I only started with 15,000 or 20,000 and I'm happy with that, or I go, I wanted really 100,000, 60,000. Well, what can I do with that 20K? Is it a benefit for my restaurant? Can I take 20 and make it into 40, 20 to 30? So my repayment on 20, I'm paying back 27,000, whatever that is, on interest or a factor rates with a lot of these, not non-APR related. It's not amortized like a regular business loan, a lot of these. Excuse me. And I was only given 9 months because I was only in that bucket of underwriting. Then I go, okay, 20, let's rock with 20,000. I'll take that. I know I'm going to be making more than what I pay back in the form of 27 to 29 or whatever that amount is, 29K. Well, I'm going to be making 40,000 in the next month or two. So you have to sit down and have a plan A and go after that. You might have plan B or C, and I recommend having plan B and C. I know that if you have one plan, why should I have others if I'm so set on one? Because things like this happen where you won't always get the amount you want. You won't get the term. You won't get the rates you wanted, but it's less about the interest rates and any kind of factor rates. It's more about the repayment and trying to get a longer term to begin with and getting a better repayment. Now, if you can't get that, that's not the end of the world. You have to look at it and go, oh, now I got to move from a daily to a weekly, or hey, daily actually works better for me. I have restaurant owners who come to me and go, they're eligible for weekly, and they tell me, no, I want daily. I know what's coming out of my account. I can manage that. I know my sales per day. I know my sales in the week. I'm comfortable. I already have a pattern. And so they're okay with doing that. Others are like, let's just do weekly because it's micro, daily, even micro too can be weekly, and it helps keep your business stable. So you know what's getting out of your account per day, per week, sometimes bi-weekly. Monthly, it's hard, especially for restaurants, any other industry as well. With monthly terms, you have to have an SBA loan. You have to go for the equipment loans, a personal/startup loan, a line of credit. Even lines of credit right now are becoming weekly, sometimes bi-weekly. Hard to come by monthly unless you have like substantial credit history and everything. And like with revenue based, you want to have like a 750 and above, 3+ years, over 50,000, more of in the 6-figure mark to even be considered for a monthly. And even at that, it's hard. So you got to begin somewhere. We don't want to give you a huge lump sum at the end of the month. You have rent to pay, other obligations. So your restaurant now is suffering, or any other business that you run. So I guess that's the gist of it. I can give you guys a lot more. I could be in here for hours literally talking about how to get a business loan. The other part of it is 0% interest. That's a business credit card stacking program, or you can get business credit cards by itself. It might not be always 0% APR, but if you have a 680 on all three consumer credit bureaus, credit looks clean, then we can look at this without any bank statements, really financials. Sometimes if you're higher up there, it might help to provide one because it could possibly get you more. But in a lot of cases, you don't need to. No collateral since you're not going for those secured business credit cards. And you can stack multiple amounts, 20, 30, 40,000. This is stuff that I would do. And then be able to build away from your personal credit, disassociate yourself, and only use that for what you need. And you can use business vendor credit, business credit lines, liquidate the cash out of those cards, use them for any investment for your business products and tools and supplies. So you don't always have to come back and get a loan if you don't want to. But if you're growing and expanding at a rate and it takes that advance or a loan to get, then by all means go for it. And you understand good debt versus bad debt as a restaurant business owner. I always tell people this, that it's not what we're giving you that is bad. It's that you haven't educated yourself enough around this, that when you go and apply, you're like, why am I only getting 10,000 if I'm doing this? Well, most get you approved between 10 to 15% of your annual gross sales. And then we look at it a per month basis. SBA loans differently. We look at those returns, those profit and loss, debt service coverage ratio. So it could be more or less on that equation. But if you want to get help from the best for your restaurant, you will be taken care of first and foremost. I do really care and I take the time to do that. And then from your business, somebody who can handle it, the documentation, especially want somebody who can handle the docs, analyze, evaluate it. I do this and I pre-underwrite a file. I'm basically an underwriter. So I'm pre-underwriting it through their eyes before it goes to the right underwriter and the right lender. And that's another thing, that if you're just going out there and applying anywhere and everywhere, you might be getting the wrong underwriting, the wrong lender. Now, there's a lot of companies out there that can advertise and have a huge advertising budget, and they're classified as small businesses themselves, more medium to large. But you got to think about this at the end of the day. Are they really doing what's in your best interest, or are they just trying to make money for themselves? They overpromise, underdeliver. They tell you, hey, no, we can get you monthly. Somebody told you weekly. No, we can do monthly. And they flip the script. They told you can get an SBA loan and then said, no, actually, I can only get you an advance, a hybrid cash advance, maybe a term loan between this amount of time. Well, why weren't you honest with me in the beginning? And so then you're getting email, text messages, calls, and all of this stuff that just you are just tired and sick of. And you finally have somebody here who has that relationship with. And I give you a lot of content, a lot of bonus stuff that comes with the content, and a lot more outside of that and beyond. The partnership that you make with me, it lasts forever. It's friendship, it's family here. It isn't like you're a stranger. It's not like we're blood related, but we're not strangers. You're a friend or family member. You can always send me a text message. Literally, a lot of people do that to me. They've been doing that a lot today. And I've set them up. I have emails right now of clients, past clients, people who haven't received funding yet, who I'm guiding them in the restaurant business that can't get approved right now, but will get approved in the future. Because if I could draw it for you right here, which I did in a live I did earlier with my team, I spoke about the different levels, like you're going up staircases. So at the very top, or you can say it as a mountain, you have the SBA loans, SBA 7A, 504, etc. There's even grant opportunities, guys. You go into the description down below, you should be able to view those. But grants are harder right now. And so I would see if you can raise your revenue in other ways. But they will also help you. There's some programs there that can help you be prepared as an entrepreneur, small business owner to get those loans. And I can also help you as well. So at the SBA level there, that can be collateralized. It doesn't have to be. They might want to see what you have, but they might take some lien on a home if need be, and on a few things too, liquidity, etc., equity. And then underneath that, you may have a collateralized option as a restaurant business owner, and I have this here, where you're comfortable with the equipment or the inventory, whatever you have, and that's sufficient enough to collateralize to get you more than what you initially could have got without collateral, or more or less. I always tell people, if you have a chance not to collateralize it, and you didn't maybe get everything you wanted, or you did, I would start there. Even if the rates may be a little bit higher because this is non-collateralized and this isn't a bank. So even if the interest rates or the factor rate's a little bit higher, that's okay. It's the restaurant industry. That's what happens. So you take that money, I take $200,000, I'm paying back $260,000 or whatever it is over 15 months or whatever you get. Then you go, okay, how am I going to use that $200,000 effectively? If I get over $260,000, what would I need to do? I have to repay back $260K or whatever that amount is, $40K, $240K, $230K. Whatever that is, $239K, how am I doing this? setup. So you have to already have a plan on how you're going to use that money. Now, if it's for survival and you're just trying to stay up afloat, it's going to be hard, especially if you're trying to lean on a line of credit, a business line of credit, if you don't get it. And the other part of it is you're going to have to work on your business credit, vendor credit, and then get access to business credit cards and pull and liquidate, cash out. I'll use them as credit lines if available, and then use them. This is what a lot of smart business owners are ending up doing. And through my guidance, they didn't know this or they heard about it, and a lot of them are really working on it. And credit, but collateralize, you don't have to collateralize. That's the option underneath that we spoke about with like the hybrid cash advance, merchant cash advance, term loan, intermix of a short term. You have a medium term. Past 3 years, yeah, sometimes we can go to 36 months or so, but in this market, it's usually 1 to 2 years. And because the banks don't lend as much, 36 months. But even then, it's hard for a restaurant. You have to work yourself into that. You got to get something initially. You got to say, hey, I'll take that 100K and then I can make use of it and then come back. I can pay it off early. Early payment discounts are there, or I'll pay it in the term that I have and I'll use it up all the way because I need that. Come back, get more. We can next time around in 60 days or 50% of it paid off, or whenever that comes out, we could probably double the amount next time and perhaps underneath the same lender as well, or move you up another tier. And then we work on the different term, the rates, extending the term, better terms, payment schedule perhaps. You have lowered rates, you have more funding available. Now when you're applying, it looks better and you have no problem being able to repay it back. So underneath that, you have credit as well. I'm not saying by far it's the lowest thing on the steps, but credit. A lot of people, they turn to credit. And when you're credit ready, it makes you better ready for a business loan in advance of any kind as you're in your restaurant. Underneath that, you can say there are friends and family and a few other distinguishing parts, and that kind of all overlaps one in another. I think I've taken up more of your time and energy than I needed to. Appreciate you for tuning in, and hopefully you got value from this, understanding how to get a restaurant business loan. It's not always cut and clear. There are people out there who overpromise and underdeliver. I can get it done. And usually I work with the best lenders and underwriters. So when things get submitted, whether it's through me via email and I organize it safe and secure, or it's uploaded into the portal and we get to see it in our back office, I'll go to work for you and make sure you get the best position. Sometimes it's one direct lender we go to, or it's a brokerage where I already have those direct lender partnerships. It's better that way right now, the brokerage, and I already have those partnerships, but because you get more flexibility, early payment discounts, and there's more maximum funding, better underwriting, a lot more that happens there, the relationship that I already have. So we can entertain 1 or 2 or 3, and then we say we really wanted this one, so we were just trying to entertain. Now you get maximum funding. They see what's happening there. It protects your credit, just so you know. It's very safe and secure. It's not like being thrown around, shopped around, and now everybody's calling you. That's not how it works. So this is a much, much better setup. And again, like I said, I helped out a lot of restaurants and I'm still helping them out. They're in the processes right now, even more new ones who are getting like 200, 100,000, 150, sometimes 300,000 if the revenue is there, 400 if not. And it's not with collateral. It's not even an SBA loan at that point. And if you don't have those other qualifications, this makes sense. Sometimes we can put a lump sum with the line of credit, but it's a contingency. You might have to take a certain amount on the line of credit and you can only get a certain amount on the lump sum. But the lump sum, we approved you for more. So it makes sense to do that. Take some reserves, probably put it in a different account, use that for another time. But just think about it. And whatever restaurant you run, food trucks, Mexican, Indian, you have Mediterranean, Italian. I could list so many more that I've already helped. And I'm so humbled to be here by your side and very grateful of the opportunity that you have allowed me to, because I go to work for people and I usually be offers and be very careful of just submitting anything anywhere, especially when we go through our application. I always let people know, don't do that because it doesn't look good to the lenders who are looking at your file. And why would you want to do that anyways when you're getting the best look right here? And I set the right expectations for you in any scenario. Defaults, if you defaulted, be careful. That usually doesn't work for you. And sometimes you're forgiven and they'll have you start off with a little bit. Other times, you can't. That's a lifeline though. So don't bite off more than what you can chew. Look it over when we get to that point. And hopefully you got value. Again, as I said in the beginning, there are multiple options. It just has to be the right one. In the questionnaire form, if I didn't say this, I probably should have said it earlier. Down below in the description to get in touch, fill that questionnaire form out. It lands in my email. I'll then evaluate, analyze it, and then give you a proper response back via email on your best funding option and options. I have process to this, guys. Processes, systems, and automation, unlike any other broker, agent / out there. And I do this very energy and time effective, as a lot of people have come to me already realize that. And you're working with the best. I got you. No worries. I have your best interest at heart, not mine. and I'm going to be there every step of the way. I'm just asking you to do the same and be characteristically sound enough to put that up front. I know sometimes we're flawed in certain things. I worked on myself hard personally in personal development. I run other businesses, and so I don't have that. Like, I'm very punctual and disciplined. I just don't want my energy or time zapped or wasted. Nobody does. No lender, underwriter wants to go through all that. So again, look down below for that questionnaire to get started, extra resources, and I'll find the best lender for you legitimately for your tier. No fluff, no theory, no nothing like that. Very safe and secure. I got you. No worries. Take care, and I will talk to you soon. Bye.